Hello and welcome to Switzer Investing TV. I'm Peter Switzer. Thanks for joining me. On tonight's program, we're going to look at all the questions you've ever wanted to ask about Bitcoin, but was always too afraid to actually wait to find out those answers. I'm talking to a guy by the name of Adrian Prezolozny. Pretty difficult name, and I've probably mispronounced it, but he comes from a company called Independent Reserve, which is a Bitcoin exchange. And it comes at a time when Bitcoin is going to be halved. What does that mean? And what are all the questions that need to be asked and answered on Bitcoin? And then Mike Gable is looking at a number of very interesting stocks, some that both Mike and I didn't know, but the charts are saying, gee, this company is heading in the right direction. We'll be looking at some really well-known companies like Forcu and Sonic Healthcare, but we're also looking at the indexes as well to see whether this pullback or correction is really something you should be afraid of or not. So that's the show. Let's kick off now with this very interesting interview around Bitcoin. Well, joining me now is Adrian Prezolozny from Independent Reserve. At a time when Bitcoin is going to be halved. Now, people out there don't understand Bitcoin anyway, but now it's going to be halved. It just adds another interesting curveball to something that is really popular with a small group of people who, of late, have been very, very keen to buy Bitcoin. Adrian, thanks for joining us.
It's my pleasure, Peter.
Okay. Apologies to you. We've talked about it before. Switzer sometimes gets mispronounced and I become Switzer, but your name is a little bit on the tricky side. So you're going to be Adrian to me for the rest of this interview.
No problem at all.
Okay. Tell us just quickly about Independent Reserve.
So Independent Reserve is a cryptocurrency exchange that we created here in Australia about just over 11 years ago, actually. And we've now grown into one of the largest crypto exchanges in Australia and also in APAC.
Okay. How did the company, cope with the challenges with the American Bitcoin exchanges? Was it a tough time for you?
I mean, I should be referring to, I guess, what's happened in the events of maybe the last 2 years or so, when we had a few issues overseas with the insolvencies of FTX and a few others. Obviously, that was a very bad time for cryptocurrency exchanges around the world. It was a very bad time for the cryptocurrency markets. Look, I think it really underlined the need for regulation in this market, and it's one of the things that we've been really pushing for a long time now, and we hope that the Australian government will choose to regulate cryptocurrency exchanges in the next 1 or 2 years. But I mean, yeah, obviously it was a very hard time, but I think we're through that now, and now crypto's on a bit of a run again, and we're looking forward to a very good 1 or 2 years ahead.
Why won't the federal government get involved in regulation?
That's a great question, and I guess it'll be a question that would be interesting to ask to the Australian government or maybe to ASIC. But in our view, a cryptocurrency exchange holds people's money. At Independent Reserve, we hold over $1 billion of assets on behalf of our users, which is obviously a huge responsibility, and we deal with a lot of transactions, we deal with a lot of customers. But right now, there are no rules set by the Australian government or a regulator that really govern, how these assets are held, what we do, how whether we're audited or not, how the governance has to actually work, which means that a lot of crypto exchanges just kind of operate in the best way that they know how, which we've been quite lucky here in Australia that we haven't had any real issues, but that hasn't been the case around the world. But there are other jurisdictions around the world that are quite well regulated. There's regulation in Singapore, there's regulation in Hong Kong, there's regulation in Europe, but unfortunately the Australian government has been a little bit behind the curve. And we've had regulation from AUSTRAC here in Australia, which regulates the industry from an AML KYC point of view, which basically requires us to report suspicious transactions, identify our customers, make sure that there's that all the I guess that when the actual money moves through our exchange, it moves in a clean way. But unfortunately, there hasn't been the regulation on the market side yet, and we're looking to Treasury and to ASIC to hopefully enforce that in the next 1 or 2 years. And hopefully it won't require a big mishap to happen here in Australia to really push that regulation forward.
How many customers do you have at this point in time?
Right now, we've got about 350,000 at Independent Reserve.
So cryptocurrency is pretty popular out there.
Yeah, it is. So we do a survey once a year of basically a sample of the Australian population, and we ask them questions about their views on cryptocurrency, whether they've invested in crypto, and it's basically a finger on the pulse of the cryptocurrency industry here in Australia. And every year we find that more people are aware of crypto, more people invest in crypto, and now 1 in 4 Australians has either invested in crypto in the past or is investing in crypto at the moment. So it's quite a widely invested in asset class right now. It's very popular, especially among the younger. The average age of our investors is probably under 30 right now, but it's beginning to permeate older investors as well. And the longer crypto is around as an asset class, the more people become more comfortable with it, and more they treat it as, just another thing to hold in a portfolio to diversify that portfolio.
What are the, apart from Bitcoin, what are the most popular cryptocurrencies?
I mean, there are thousands of other cryptocurrencies, but a few other ones that are quite large and popular. For example, Ethereum. That was really the #2 currency now for a long time, and it presents a different investment thesis to Bitcoin. Whereas a lot of people view Bitcoin as a digital gold, as a way to hedge against inflation and loose monetary policy. Ethereum is more of a platform, like a global computer, where people can actually build other things on top of it. And the demand for Ethereum is kind of driven by different characteristics to the demand for Bitcoin. But I mean, there are now thousands of cryptocurrencies, and a lot of them have very large market caps in the tens, hundreds of billions of dollars.
But because there's so many, you being an expert, do you worry that some really shouldn't be touched because there's just too many question marks, not enough regulation?
Well, I mean, interestingly, one of the great things about the crypto industry is, I guess, that the barriers to entry really aren't there. So if someone's got a great idea, they can create it, and it's quite easy to create a new currency. But obviously, as you said, not all cryptocurrencies are created equal. So the onus is really on the investor to do their own research, to remember that they're investing into a space where maybe the protections aren't quite there that they would expect in other assets that maybe they're more used to investing in the past. So really, education's the name of the game, and we always encourage our customers to educate themselves about the investment that they're making, which holds true for any other investment as well, really.
Okay, well, I never do Bitcoin for one reason. I probably discussed this with you in the past, is that it's just there are too many question marks for me, and as someone who gives education and advice to people, if there are too many question marks, it just becomes too hard for me to be associated with it. But I guess I understand Bitcoin. There's just a limited number, and there's a group of people who really love Bitcoin. So I always figure that Bitcoin will always do well because of that. It first started advantage, it's limited, and all those sorts of things. And people in the, either in the IT area or in the dark world of gambling and whatever, Bitcoin can be popular. It just seems to me, with the other cryptocurrencies, doesn't it rest on the fact that there are a sufficient number of people who believe in that particular cryptocurrency for it to actually either do well or even survive?
Look, I mean, I think if you look outside of the top 10 or 20 cryptocurrencies, yes, that may be the case. But if you look through the top 10, they've all got pretty well-established use cases now, and they're actually being used by people around the world to accomplish various things that they need to accomplish. So I think there's now an intrinsic demand for the utility that a lot of these coins do actually are able to provide. You know, it's I guess it's hard to put a value on a decentralized computing system that cannot be controlled by any one entity. There's no entity like Amazon AWS that can, you know, take your service down if they don't like what you're doing, or they can start charging you more for the service or whatever else. It's really a different paradigm in thinking about computing. And a lot of people are creating these decentralized applications that run on Ethereum that, you know, can do things that you really wouldn't be able to do in any other way. So I think the longer this continues, the more utility will be created and more real world use cases will exist as well.
Can you give us an example of where a particular business or an industry would say, yeah, we want to do this and we're going to use Ethereum? So
Sure.
can you give us an example of that?
Well, look, I think a widely used example over the last 3 or 4 years was lending on DeFi, right? So there's, I guess, a lot of people out there who can't get access to a traditional loan. Maybe a bank won't lend them money for whatever reason, but on DeFi, it's decentralized finance. There are, you know, anyone can participate. There isn't a gatekeeper like the banks here in Australia that can choose, you know, who gets banking, who does not. There's no one who can debank you. So, you know, a lot of people have, you know, taken out loans on DeFi, which runs on Ethereum mostly, and then done things with the money that they're able to get because of that. They invested in their businesses. They basically participated in the economy.
Yeah, so you're saying a startup business can't get a loan from a bank, goes to DeFi, gets X number of Ethereum. Are they Ethereum dollars, or what do we call them? Ethereum currency?
A lot of DeFi works on USDC, which is a currency pegged to the US dollar. So, you know, all these problems of, you know, our crypto has a lot of, you know, moves up and down, the volatilities there. A lot of these have been solved by various tools in the ecosystem. So, you know, USDC, USDT are pegged to the US dollar. They're, you know, two of the most widely used cryptocurrencies right now.
Okay. So they get this money from DeFi, and they say, for example, want to buy computers, and they find a business that's prepared to accept Ethereum for the computers.
Yes, that could be one way potentially, yes.
Okay, all right, we get it. But I guess at the end of the day, all these other extreme currencies out there, there's a matter of faith, I guess, in many ways, that this thing's going to work, value's going to go up, and so on.
Yeah, I mean, of course, if you look out at the long tail of, you know, all those hundreds of different coins, a lot of them are a speculative investment. I mean, it's kind of no different to investing in a small cap mining stock on the ASX. You know, you kind of hope that when they dig a hole, that they hit something, but often they don't. And, you know, that's kind of what happens, and that's life.
Yeah, I think it was Mark Twain, the famous American novelist who wrote Huck Finn and Tom Sawyer, once said that a miner was a hole in the, a mine is a hole in the ground with a liar standing in front of it. But we won't go any further. All right, now you're on my program tonight because of the halving of Bitcoin. Tell us why they're doing it and what's the implication of that.
So the Bitcoin halving is an event in Bitcoin that happens every 4 years. And it's got the effect of halving the supply of new Bitcoin being produced. So this all comes back to the fact that there can never be more than 21 million Bitcoin that can ever exist. So the way this is achieved is that new Bitcoin get produced by the miners every 10 minutes, but the rate at which these get produced halves every 4 years. So prior to the last halving, which happened last week, there were 900 new Bitcoin produced into the ecosystem. So basically, the inflation rate of Bitcoin was about 4.5%. After the halving, there's only 450 new Bitcoin that are produced every day. So the inflation rate has halved. In 4 years, there'll be one more halving, and then 4 years after that, another one after that. And these halvings will continue until the year 2140, I believe, at which point we would have produced the 21 so no more new Bitcoin will be able to be added into the ecosystem at that point.
Yeah, so it's an important development to restrict the ultimate number of Bitcoins that will be in existence.
That's correct.
Tell us, obviously you've been watching Bitcoin for at least 11 years. What do you think is the pattern that you've noticed? I know I was talking to someone recently who explored the Bitcoin world, and he found that there are certain times when it's great to buy and also certain times great to sell. What patterns have you watched when it comes to Bitcoin?
Yeah, so the Bitcoin market is very cyclical. It operates on a 4-year cycle, which is largely because the halving happens every 4 years. And what normally happens and what we've seen in the past, and it's pretty much happened every halving in the past, is that after a halving event, about 6 months later, the fact that the supply of new Bitcoin has halved, it starts to permeate the market and impact the market. So, you've usually got a demand that is fairly consistent or maybe increasing over time, and the supply has been reduced. So that tends to have an effect where the price begins to go up. And then as the price begins to go up, Bitcoin tends to get more attention in the media, more people start talking about it. And that, often creates a violent increase in the price, you could say. So the price, might go up 300-400% in the space of a few weeks. And, that creates even more talk in the media. And then you end up creating a bit of a bubble, I suppose. And then that bubble tends to pop. And then you have 1 or 2 years of a very quiet market where, everyone talks about Bitcoin being dead, and people say, well, this is over now. And that people kind of start to move on to other things, and Bitcoin starts to lose attention. And then another halving comes along, and it all kind of starts again. And this has been a cycle that has repeated around every halving, and it's been quite predictable in the past.
Adrian, one last question. I know as a watcher of more conventional investments, I know the red flags that make me get a bit spooked. And the one thing I've noticed with Bitcoin is that it sometimes lags a tech bounce back. But when tech bounces back, Bitcoin eventually gets to play, and often plays very, very well. Is it fair enough to kind of assume that if anything comes along that's really going to KO tech stocks, like rapidly rising interest rates, that there will at least be a time where Bitcoin will also suffer as a consequence?
Yeah, look, I agree that's kind of been the case in the past. So, I think in this period of time, I guess in this period of evolution of Bitcoin and people's understanding of Bitcoin, a lot of investors treat it as a risk-on asset, like you said. So they kind of treat it like a technology stock. And I think a lot of that comes from, the inability of institutional investors right now to have a good pricing model around Bitcoin, because it's unlike any other asset that they invest in. So they think, well, it's probably the closest to a technology stock. Let's treat it like a technology stock. And that has been the case over the last 2 or 3 years. But, you have to remember that Bitcoin is not a technology stock. It's not a company. It doesn't produce technology. It's an asset more like a commodity that's traded 24/7 around the world, and people kind of in various parts of the world treat it in different ways, and they view it in a different way. And I think that over time we'll see that the attitudes of investors change, and it'll be treated less like a risk-on asset, but more like a commodity, like a gold, like an asset with a limited supply that cannot be produced arbitrarily at will by any government, can't be inflated at will. That can be transferred easily around the world, can be stored easily. It's really, if you look at its attributes, it's really more like a gold than it is like an Amazon stock. But I think just where we are right now with people's understanding of it, it's being treated in that way. But I think those correlations are beginning to break. So if you look at the performance over the last 1 month, it looks like interest rates aren't going to drop this year like people thought, or maybe if they will, then it won't be by as much. But the price of Bitcoin hasn't actually dropped by as much as a lot of other technology stocks have around the world. So I think those correlations are beginning to break. Yeah. And I think we're now in a market where there are literally two groups of people that view Bitcoin in very different ways. And the group that views it more of a limited supply commodity asset is growing, and the group that's viewing it as a risk-on asset is beginning to shrink. So I think you will see these correlations change and evolve over the next 1 or 2 years.
Yeah. It seems to me it's a poor man's gold, but the price of Bitcoin is a lot higher than gold. And I would say that when people ask me about gold, I think it's the best time to buy gold is when the price is really, really low. And that's been pretty well the case for Bitcoin.
Buy low, sell high. That's pretty good advice there.
All right, mate. Great. Thanks for joining us.
It's my pleasure. Thank you very much.
My pleasure.
Cheers.
And that was Adrian Predalozny of Independent Reserve. And now Mike Gable of Fairmont Equities looks at a number of very interesting stocks, which the charts are saying look pretty good. Well, most of them are in that category. So let's go join Mike Gable of Fairmont Equities. Thanks for joining us, Mike.
Thank you.
So we've got a few things to look at now. The market's been very volatile. Some people talking about we're in the pullback, and we were, but then it rebounded. The market's up today. So let's kick off with the market that really drives everything, the S&P 500. What are you seeing there?
Well, look, I mean, so far it's just a run-of-the-mill pullback, really. I mean, every year you get these, 5 to 10% pullbacks, and that's exactly what we have now. So, if we have a look at the rally off the lows in October, clearly very strong move higher. So I don't know why anyone's surprised to see the market pull back. This is only about a 5% move. Is that it? Well, I mean, it's been trading pretty well in the past week. I know our market has had had a rough day on Friday, but in terms of the US, not trading too badly, and maybe it does something like what we saw in the second half of last year, where it just needs a little bit more time to wash through. But I just don't see it coming back to the same extent at this point in time. I think it might drift sideways a bit and frustrate a few people, but essentially just a pretty standard cooling off, and I expect it to head higher throughout the rest of the year.
And I guess the only thing that could send it low would be a surprise piece of economic data that says inflation's rising in the US, and therefore they might have to raise interest rates, or no cuts forever, or something like that. The market needs to be completely spooked for that to become something serious.
Yeah, at the moment it seems as though the market's more concerned about the fact the economy is doing well, companies are doing well, and that seems to be overriding any of the other negativity.
Yeah, exactly right. Okay, let's go to the local market now.
Yeah, so this
very
is
different chart, isn't it?
Yeah. But
that was similar.
But our market still looks good now at this point in time. So, this is a weekly chart, and I'm still highlighting. We spoke about this last year, how the market was building up under that 7,600 level, and as soon as it gets a breakout, that will be the start of the new rally. And we had that breakout earlier this year. We've come back to retest it, give or take a few points, but generally we've come back to that breakout level, which is quite natural, and we're finding support around that level. Looks fine. I mean, for those who are into charting, you could call this pattern an inverse head and shoulders, which essentially is like a continuation pattern.
An upside down head and shoulders. So
down.
It's a head inside the shoulders, probably where the chest is.
Well, we've got the person hanging upside down.
Okay.
But basically, it's a positive. There's been the breakout. We're retesting it, and it should move through 8,000 by the end of the year.
Okay, so once again, it's going to be a surprise piece of data. This is not telling you that the market until Friday was worried about rising interest rates.
No, look, and I mean our market, because it's been a double-edged sword with all the resources that we've had. It's hurt us a few years ago when tech was going up in the US and we lagged, but now that's going to help us, of course, with rising commodity prices, gold, copper, what have you. So I think that will actually help our market.
Yeah, and China on the improve will be a big help as well. Let's go to the next one now, some individual companies. And there's Forcu. It's something that you have liked when a lot of the analysts haven't liked it.
Yep.
I guess it looks as though it's trying to do another comeback.
Yeah. I've been a buyer of Forcu again in the past few weeks or so.
Yeah.
So the overall pattern here, this is a weekly chart. So as we spoke about last year, the building up under resistance at 23, the breakout saw it run up towards 30. It's come back to retest it. It's bounced off that old level. And then in the past few weeks, it's essentially traded sideways. So to me, it looks like it's preparing for another move higher. So
would you sell at 30?
Look, I did sell a bit earlier than 30, but I'm definitely getting back in.
Okay.
Or I have got back in for clients. So,
okay. Yeah.
Looking good.
Yeah, and I guess helping you was an improving Chinese outlook. Still not as great as you'd like it to be, but it's a lot better than what the experts were tipping, say, 3 or 4 months ago.
Exactly.
Yep. Let's go to the next one now. Chalice.
Chalice. Look, unfortunately, still a bit of a sick-looking chart. So, looked like a hero on this half, and then in this half, it's obviously given up from about $10 down to it's trading only slightly above $1. Maybe it's basing. So what I mean by that is maybe there's enough buying support that it heads sideways for a while, and the reason why it'll be hard for it to rally strongly from down here is because you've got so many people have paid higher prices for Chalice that every time it gets a bit of a run, and I think today's one of those days where I think it's up 8 or 9%. It doesn't tend to follow through because people hit the sell button and they think, well, that's my chance to get
but
out.
If you got in at say 5 or 6 or even 8 or 10, it's interesting. But it basically is in that sort of space that it just needs some circuit breaker to make it come out of that funk it's in now.
Yeah, exactly. And then it needs to work through all the sellers who sell into that. So that's why you end up with it heading sideways for a while as it builds a base, and then eventually, hopefully, all the stars are still aligned for the business and it can head higher. But I think it's too early for that.
Given Tim Goyder's involvement in Chalice, the last 12 months or so hasn't been great for the Goyder family.
No. I mean, he was in all the papers not long ago when it was
buying a lot when it dropped.
Yeah,
because his brother's been copying at Qantas and AFL as well. Right. So it's been, and I must admit, Richard Goyder used to be very good on my TV show when he was at Wesfarmers. One of the few guys who'd turn up whether the report was good or bad. But since then, he's copped a bit. Let's go to the next one. ResMed.
Yeah. I have to admit I've been selling it today for some clients. So yeah, done really well off those lows. I think from the October low to where it is now, you're looking at a 50% return. So what we've had is, as we've spoken about before, the big drop, the base, the break out of the base. So that's your buy signal. And it's traded really well. So you get these nice rallies, consolidation, rally, and you've had this sort of longer consolidation here. It's popped up again, and clearly in the past couple of days, I think it's up maybe 12% in 2 days. So it's done quite a bit fairly unsustainable. At least
Is that why you're getting out while
short
they're
term.
going good?
Yeah, look, some of my clients who are happy to hold longer term will be holding it here, and others are happy to bank the profit. And what I'd be looking for is something similar to this, where you had a very sharp move up, and then it spent a few months in the wilderness there, and it had its sort of 10% pullbacks along the way. So that there's a high possibility of that happening again. I could be wrong. What I'm looking at here with these blue lines is there's a gap in August, and often when you see these big gaps in share prices, when a share gets back in that zone, it tends to suffer quite a bit of selling. I mean, don't ask me why, it's just an observation.
I was going to ask you why too.
But
you cancelled me.
I knew you would ask that. So with ResMed, I think it came within about 8 cents of the top end of that gap, and then it's been drifting lower all day. So look, in the short term, it will come back. Longer term, I think it still has further upside. So for any of our viewers looking to buy ResMed, I don't think you need to run in today. I think just wait for a bit of weakness, see a bit of profit taking like in these areas here. Maybe it comes back towards $30 and then pick it up again, because I think it's still a sort of a mid to high $30 stock.
I saw an interesting interview on a program called Real Time. A US comedian, Bill Maher, has a TV show once a week, and he's a bit of a satirist, and he actually had a well-known American health television star who's well-known in America. I didn't know her, and she was laying into the magic diet drugs, which of course affected ResMed's share price at one time. In case you didn't know, the argument was overweight people take the drugs, they're no longer overweight, therefore they don't have the sleep apnea they've had in the past. ResMed's going to have a problem. That was kind of the simple argument. And when he asked her why she was railing against these drugs, she said, quite simple, just read what's on the box. And there's a whole lot of warnings about what happens when you take these magic drugs. She said there's going to be real problems for it, and I think they probably exaggerated the impact of the change on people, the weight loss and the sleep apnea issues. ResMed's probably resumed its successful performance.
I mean, this was a gift. You don't see these opportunities every now and then. To see it drop from current levels in the low 30s to the low 20s. On something so silly.
And we got that one right. We'll ignore the ones we got wrong, but that one we got right. Let's go to the next one. Okay, talking about health stocks, Ramsay has been a disappointment. I've got to say, when its share price fell, I thought, another good buying opportunity, but it really has struggled. Are we seeing anything to raise our confidence?
Not yet, to be honest. I mean...
And we like you to be honest, Michael. You have a choice between dishonest and honest.
No lies.
We go for honest.
So this is a weekly chart, and essentially it's at the same level as 10 years ago. So I know we have stocks like CSL, which are the same levels as 3 or 4 years ago, but this is quite extreme. So 10 years of nothing, really.
And these guys were offered, what were they offered? 70?
Yeah, it must have been up here.
Yeah, $80.
And this is why I always
say... And the board said, no,
you get these
we're better than
offers.
that.
Just sell the stock. Because look at the downside risk if it doesn't. So you get these takeover offers and you hold out for a little bit more, and then it doesn't go through, and then you have that happen to you. And look, you could maybe say, well, there's a bit of a range here. It's at the bottom of the range, but look, there's just nothing at the moment that's telling me that it can head higher. If you're looking at healthcare stocks, obviously, ResMed, it's run hard in the short term, but that still has further upside. Cochlear's trading well. I think CSL obviously is a much better company than Ramsay. So, there's already 3 healthcare stocks. Do you need a 4th one? Probably not.
No. I guess for the people who are holding, would you be a seller, or would you?
I'd move on to something else.
You're a hard man.
You can't hold everything.
You must be a tough father for your poor kids. All right, let's go to the next question. Next one. XRF. Now, both you and I weren't sure about this, but we were quite impressed with the chart. This is a XRF Scientific, and they are into.
It looks like they're into scientific testing in the mining area. Again, I hadn't heard of it, so just from the the little 2 seconds research I've done, but just purely from a charting point of view, great chart, and it makes sense if they're in the right sector at the moment. So I guess what's interesting with this chart is you get, there's been a couple of instances where you have that sort of classic formation of a resistance line. You break above that resistance line, meaning all the sellers are gone, and then the stock's able to resume that uptrend. So we could see at this point here, sort of essentially headed sideways with a bit of selling kicking in every time it got near about sort of 75 cents, 80 cents. And then as soon as it cleared that, it was right to rally again. And then once again, we could see here about a year ago, there was obviously a bit of selling up here near about $1.35-ish. And then most recently, it's come back to that level and it's popped up. So it looks like all the selling is over. And if this is one big consolidation that's been in place for about a year, that means we should end up with a multi-month rally from here. So far, so good with this.
Does it mean it's a company you would do some homework on, given the fact it wasn't on your radar screen? I'm inclined to do exactly the same thing myself.
Yeah, if it's heading the right way and it's doing all the right things, then it's definitely one to look for.
Let's go to the next one now. It's another, this is a more well-known one, Sonic Healthcare. Doesn't look too hot.
No, it doesn't. So unfortunately, no indication that it's forming a low or seeing great buying support. It's just one big downtrend since mid-2021 when it looked like they were going to make a fortune.
Pandemic was good for Sonic, wasn't it?
Testing, So pandemics don't last forever, and that's what you end up with. So again, how many healthcare stocks can you hold? Do you need to have this one?
I guess the answer is no.
Yeah.
I apologise to the board of Sonic, but at this point in time, you're not doing enough to impress us. Let's go to the next one. And another
one we haven't heard of before.
This kind of shocked us. And I should say, some of these have come from our subscribers who, when we do Boom Doom Zoom, which you've started in occasionally, they come from left field with some interesting companies we don't know. And this was one of them, AIC Mining. AIC Mining.
Yeah, the name of the company. So again, quick look, it tells us that it's copper and gold, so the two commodities that are doing really well.
Yeah,
so
that's
again,
a good point.
it's I'll have to look into it.
It's been there before. That's the interesting thing, isn't
it? Yeah. So essentially, what we've got is you've got a downtrend that's again a very clear line in place there, and that was broken. This is a weekly chart, so it looks like only about 2 months ago. So shame I wasn't aware of it then. So it's on the way up. I mean, to buy it here, it's run pretty hard. You'd be looking at
bit of a pullback.
Yeah, a bit of a pullback, but you'd be holding it. And I guess if you're out there thinking, well, I want to get exposure to copper, and at the moment in our market, it's pretty much BHP and Sandfire are the big two.
And BHP's trying to buy more through Anglo-American.
So maybe this is one to look at if you're happy to take on a bit of risk.
Yeah.
Look, as I said, don't know anything about the company, so viewers have to do their own research, but it's trading the right way. So that's the main thing. I mean, the last thing you need is to, you've been positive on copper, you bought the copper stock, you were right, copper's going up, and then your stock just goes down.
Yeah.
At least this one's heading the right way.
It's interesting, Mike, and a lot of my clients, my financial planning clients, have been asking me about gold. But my problem is I think gold could go higher, but you are at record highs, aren't you? So and when it falls, it falls.
Yeah, it can move pretty quickly.
Are you buying gold? Are you buying gold stocks?
We've definitely been buyers of gold, since
Are you still
last
buying?
year. I'd be looking to buy on a pullback from current levels. So at the moment, the gold price is consolidating. But when you look at, the central bank buying, and it seems to be that gold's in a bit of a sweet spot where if they're not raising rates, everyone thinks that inflation will get out of control, so you'll buy gold. Otherwise, if they do drop rates, then gold clearly benefits from that.
Yeah,
So
I guess if wars stop, that's probably a big one to believe in. But if interest rates start to fall, then we may well have seen the top of gold. But those who got in early, and look, ones who got in early have been waiting a long time for this recovery, haven't they?
Yeah, well, I mean, gold, it is very cyclical, and there's been periods where I've just stayed away from gold stocks. I think, until we started buying last year, I don't think I traded. I think it's been years since we've traded gold to any great degree.
Okay. Do you have any more stocks left? Well, your favourite.
Yeah, I brought something in today. So this is Macquarie. We all
Gee,
know
you're going very conserve, mate. But I
Macquarie
totally agree with you.
I was going to bring in another uranium stock. I thought I've already done that a few times.
Yeah.
I just really like these levels for Macquarie. Obviously, they're a beneficiary of improving global growth, et cetera, et cetera. So in terms of the way it's traded, very nice sort of pattern here where you had this sort of cooling off in the share price since the peak in 2021. Very clear downtrend line which has been broken. But since then it's been tested on a couple of occasions. So back here, I think in February, it dropped very briefly and then bounced again. And then most recently, in the past couple of weeks, it sort of dropped again to that old breakout zone near $180, and then it's bounced. So you end up with this sort of double bottom within, I'm not showing it here, but the long-term trend for Macquarie is to the upside. So you get these little double bottoms, and that's quite a bullish sign. So I think here in the 180s is a buying opportunity.
And I guess what you're betting on is, does the US come out of its potential troubled period and there's more growth, lower interest rates, tech companies and growth companies do well, and Macquarie is intimately connected to growth, isn't it? And the US is more important to Macquarie than Australia nowadays. So all that's the whole story. And it means, from my point of view, when people ask me, is I won't be surprised if it beats 200 because it's been to 200 on the strength of what you're saying. What would you expect, 210, 220 over the next year?
It should go to new highs. But yeah, once it gets to those old highs near 110, 115, it might obviously slow down because there'll be people selling.
You're worrying people. You said 150.
Oh yeah, sorry.
Yeah, a lot of people just instantly just press the sell button. Yeah. So there you go. All right. So that's a fair call, and it's an interesting call. Mike, thanks for joining us.
Thank you.
That's Mike Gable from Fairmont Equities. And that's the show for this week. I've allowed everyone to see the entire show. This is what the subscribers to the Switzer Report gets to see every week. As you can see, it's really worthwhile information and certainly worth paying for. If you're interested in becoming a subscriber, please go to switzerreport.com.au. I hope you do become a subscriber. I'll see you next week.